Hello everyone, this is the pre-market report video for today 25th October 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's have a look at what happened on Indian market yesterday. For the second day in a row, Nifty had a huge volatility in the first 45 minutes. Then after that it was fairly stable but with a negative bias and closed negative for the fourth consecutive day. Here if required please pause and have a look. This is the participant wise open interest data for the monthly future index contract. Particularly, please look at the proprietary trader section. Day before yesterday, at the end of Wednesday, proprietary traders held 52% of their position in the long side. That yesterday in one single trading session turned into 57% short position. All other participants, DII, retail and including FII, all more or less stayed in the same place. So it looks like Indian professional traders was the problem and made our Nifty crazy volatile, and in fact yesterday FII reduced the short position marginally and increased the long position also marginally. Hence only I think that initial 45 minutes volatility was caused by Indian professional traders but not FII. Then in terms of option data, because of the weekly expiry, 28% call option and 14% put option had been unwound. So more than twice the number of call option was unwound than put option, which in turn improved the overall put call ratio to 0.96 from earlier 0.8. Again if required please pause and have a look. This was the yesterday's closing different participant wise long and short put call ratio. As usual, detailed analysis I explained it in the YouTube community page. Here in this video I'll just explain my observation as a summary. So far this week before yesterday, retail traders was inclined positive. On the other hand, both FII and proprietary traders inclined on the negative side. That now for 1 or 2 days, very temporary short term, FII turned positive along with the retail traders. Whereas proprietary traders became furthermore negative, so possibly we can expect some short term bounce. However, there is only 1 week for the US presidential election, November 5th, so it's better to stay away from the market. Disclaimer, it's just my opinion. Don't make trade based on this. Other than that, HUL quarterly results was very bad. Though there was an improvement in the rural side, now it looks like there is a demand sluggishness in the urban area. So Hindustan Unilever fell over 5%. In addition, other FMCG stocks also fell significantly. Hence, the whole FMCG sector was the major dragger yesterday and it was down over 2.5%. If we see the Nifty negative contribution, Nifty was down only by around 30 points, whereas just HUL and ITC together dragged the Nifty by over 50 points. So if these two stocks not means, Nifty might have closed positive yesterday. Then the third dragger was Hindalco. Yesterday it was down near 4%, but the drop was nothing to do with Hindalco at all. We know globally Hindalco is one of the major aluminum producer. Their closest competitor is the French company called Constellium. This counterpart yesterday issued the bad forecast, which in turn affected that stock and so the Hindalco, and it dragged down the whole Indian metal sector. Then institution wise, for the 18th consecutive day, FII was net sellers. Yesterday they net sold for 5,060 crore rupees and DII net bought for 3,620 crore rupees. On top of that, in the derivative market, FII net sold for approximately 20,500 crore rupees. So these were the quick takeaway from the Indian market. Then coming to US, even on the last pre-market video, we discussed Tesla quarterly results beats the analyst estimation. So in the aftermarket trading, it increased near 12%. That 12% last night in the actual US market increased 22% because Tesla is the index heavyweight in both Nasdaq and S&P 500. Single-handedly, it made both the index to close positive. S&P 500 up by 0.21% and Nasdaq increased 0.75%. However, on the negative note, Dow Jones still closed negative 0.33%. Then in case of VIX, it marginally down and closed around 19. Regarding Indian ADR, as it is, both the banks closed flat, whereas both the IT stocks closed negative of around 0.5%. In fact, in the US market, if not Tesla, both Nasdaq and S&P 500 might closed negative. So overall, IT stocks indicating marginal negative and banks indicating a flat opening. In line with that, today early morning at 3 am Indian Standard Time, GIFT Nifty closed around 24,459, equating it with the spot market. For now, it's indicating flat to negative opening. About oil, for the second day in a row, it haven't changed much. At the time of this video, WTI crude trading around $70 per barrel, whereas Brent crude closed at $74.5 per barrel. So those were the things happened yesterday and last night in the global market. Then regarding stocks in focus, please refer the YouTube community page. I added my view for each stock. ITC and IndusInd Bank were the two major companies released their earnings, and both the results were not good. Especially IndusInd Bank, its profit down by 39%. Then on the positive side, in the Nvidia summit in US, Nvidia announced the AI partnership with Reliance to capture the complete AI Indian market. Generally, I consider this as super positive, but Reliance GDR was just flat to positive. As a summary, global momentum and US market turned positive now, but IT stocks showing some weakness, which in turn on the GIFT Nifty is indicating flat to negative opening. However, please be cautious, short covering is still due. Moving on, yesterday as per stock open interest, TVS Motors, Godrej Properties, Jubilant Food Service, Colgate-Palmolive, Escorts and Lalpath Lab got an increased open interest along with a negative close, indicates the short build-up. On the other hand, Coforge, Tata Communication, Shree Cement, PNB, Sun Pharma and City Union Bank got an increased open interest with a positive price close, indicating the long build-up. About the things to look out, Coal India, JSW Steel, Bharat Petroleum, Bank of Baroda, Bandhan Bank, Bharat Electronics, Indigo Airlines, DLF, Hindustan Petroleum, IDBI Bank and Inox Wind are some of the major Indian companies are going to release their earnings today. Then in terms of macro, before our market opening, Japanese consumer inflation data is due. During our market hours at 12:30 p.m., Germany's business sentiment data is scheduled to release. And in the aftermarket hours for US, Michigan future inflation expectation, durable goods order are some of the items we need to keep an eye out today. Coming to technical, as discussed, Nifty opened 20 points gap down and after 45 minutes it was range bound throughout the session, then closed slightly below 24,400. Thus on the daily chart, Nifty formed a doji-like candlestick pattern following an inverted hammer pattern in the previous session. This pattern came after a recent fall and generally indicates a potential reversal in the trend. However, Nifty traded below the 100-day exponential moving average and the 20-week exponential moving average and also continued the lower high and lower low formation. Those were indicating weakness for the short term. Hence, as an overall, considering the formation of inverted hammer and doji pattern in the last couple of days, some bounce cannot be ruled out. On the upside, 24,500 to 24,600 might act as a resistance, while a break below 24,300 could drag it down sharply. In case of Bank Nifty, it opened 30 points gap up and continued to defend the 100-day exponential moving average 15,100 for another session and closed above 15,500. Thus on the daily chart, Bank Nifty formed a bullish candlestick pattern following a bullish inverted hammer-like pattern in the previous session, which strengthens the positive momentum. Additionally, Bank Nifty formed higher high, higher low formation and RSI momentum indicator showed a positive crossover. But it's still below the 20-day and 50-day exponential moving average, which are crucial levels. Hence, breaking the Bank Nifty's resistance around 15,800 to 15,900 level is needed for an upward move. On the weekly options front, the maximum call option open interest was at 24,400 strike, followed by 24,500 and 25,000, with maximum new call option writing at 24,400 strike, then 24,500 and 25,100. On the put side, the maximum open interest was at 24,400 strike, followed by 24,000 and 24,300, with maximum new put option writing at 24,400 strike, then 24,300 and 23,900. Thus, from options data, it's indicated that 24,400 level is likely to be crucial for further market direction. Above it, 24,500 may serve as immediate resistance, while below it, 24,300 is the level to watch. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for for me and viewers educational purpose only. Thanks for watching.